Hello, I'm Isaac, and today I'm going to take you through one of my trades. Now this trade is from last week and it is an initial bounce break in the Bund. So it's from Friday the 5th of November as well, just in case you want to know. So this is NFP day. Okay, so let's jump right into it and just look at the trade setup. So these are just some copies of my notes from my debrief. Basically this is a 30-minute chart, really zoomed out. Key kind of thing here is that we've got this whole block down here, and this block that I've just standing in front of it, sorry, but this block down here, and the key thing to think about here is just the highs of this block, right? So what's up here? So now I'll just get rid of that so we can see the detail. So basically, if we go from left to right, there's this cash gap. So this market has this offer down here, singles, cash gap, and then it holds that gap with all these poor highs up here. Now the market offers, quite rotational, and then we get this like poor participation double bottom down here. The market then starts to squeeze, which happened sort of like Tuesday, Wednesday, Thursday, and that included over FOMC meeting and the BOE meeting, and so it continued up here. Now, the sort of like closer time frame set up for it was the fact that the market after the BOE squeezed, held singles, and then held this block up here, and that's where the market opened the next day and where the initial balance was, and so that's where the break came from. So there, basically, I was thinking, well, we have this block. It's failed at the lows, it's squeezed back through the range, has poor highs. I want to see those highs resolved. And so that's basically what I was looking for there. Now, just quickly to sort of show this in the profiles, again, it's quite zoomed out, so it's quite hard to catch all the detail. But just a few little things. You can see how sort of like top heavy the TPOs are here, also quite blocky here, no excess here, no excess there as well. So you can sort of see that that's not really great structure. And just in here, you can see there's the small gap. So then if we go to the other side, you can also see that like there's not a lot of volume in the tails. And and so then that's also, really important for understanding how the low was made, because I said it was on poor participation. The fact that sellers aren't stepping down and then selling into the lows is really, just another way of you being able to, to see that participation. So A, the volumes on the day, B, the fact there just wasn't any volumes around the lows. And then so you can see we've got these squeezes, like there's not very much, it's such low volume in the tail. Then you've got buying tails here on the bottom of all the profiles. They're all quite elongated, values moving higher. Oops, sorry, you can't really see that, but here's value 1, value 2, value 3, overlapping and higher, and then note volume value at the highs, and then singles. And those singles are also respected on the Friday's profile. So yeah, so there's like quite a lot in there. But then if we just kind of like try and summarize all of that, so the market's had a strong bid. Has buying tails and profiles, value is shifting higher, stretch profile shape, and bullish after central banks. There's a lot of stuff saying this market's bullish. Then if we look at the other information about the structure, we've got poor highs above, so we've got no excess into a cash gap and very TPO heavy. The market had a strong close yesterday, pulling volume value, but not time value in cash to the highs, but that's still significant. And it was also holding the singles. So then basically, what I was looking for here is if this market's going to be strong, you just want it to respect those singles. And so you see the IB was within yesterday's upper block. So, we said it had volume value, but not time value. But there you go. There's like already another 2 TPOs in there in that same zone. And then by the time you get to the C prints for the breakout, you've got 3. So, you can see how if you're thinking about like, okay, we've got volume value, the VPOC there, and we want to bring sort of like time value up as well. Well, that's, doing that. So then you can see the market respected the singles. It didn't even offer down into them. It created like just a bullish initial balance, like, this, if these are all your A's and then your B's here. So you've got this buying tail within it. So that was kind of enough to say this is bullish. And anytime the market tried to offer within the IB, it was picked up. So the trade idea was basically to get long for the initial balance break, to see if the market can resolve the poor structure above. Now, I've been working on my kind of like mindset space while I'm trading, and actually I was quite happy when I wrote these slides that I wrote it quite naturally with this bit in here, to see. It was not like this market is going to break. It was like to see if it can break. And I think for me, that's quite a big thing. So like, I was quite happy I wrote that, and we'll get to that a bit more later. But anyway, the risk here to this trade was that the market might not resolve the structure before NFP. So a big piece about this day was the fact that it was an NFP day. So, what was quite tricky then as well, if it doesn't quite finish your trade before NFP, then you've got this decision, you're in a position potentially, and you've got this big number coming out. What do you do? Okay, so then if we just go and look at the shorter time frame structure again from a debrief. So basically here you can see, here's the open, a quick test down, and then bid up. And again, you can see here, offered, picked up, offer, picked up, offer on the C prints, just after the open, picked up. And then we've got here, which is what we're going to look at. So we're going to look at this part here. And you can see here that we've got this, like, I call it a control block, but just kind of like the little congestion zone that you get just before a breakout. And you can see it wasn't all that aggressive. It kind of like held this block up here and then drove from there. So it's sort of like, instead of just breaking and going, it kind of like stalled and then went. The rest of the notes aren't so relevant, but you can see that in terms of like holding it, because we're just going to look at the initial break, but to have the conviction to hold it, you had to hold pullbacks right back into there. So that's, a big part of that let's see thing. So I was thinking, well, here's this control block. If that's where the buyers have stepped up to, then the market shouldn't break the lows of that. So that's where my stop was. So you can see I had to let this wash around quite a lot. Yeah, so anyway, that was the way I looked to manage the trade. So what we're going to do now is have a look at the recording. So right now the market's just come off, we've just had the open. You can see here on the 1 minute chart, the highs. I think the buying tail will be down here from the A prints, and the market just made the C print low and is about to start bidding towards the high, or it'll auction out up here, try and break away, but sort of stall and then go. So we're going to look at that. All right, I'll get rid of that diagram so that it can play out. And the Bund is this one here. Okay. So I'm doing this at 2 times speed as well, because I think like this auction can get a little bit slow as it breaks out. So, right, initial balance high, sort of up here. So we're here just to see what, to watch this market as it's failed at the bottom and bidding back through the initial balance. So you can see that we're getting buying into the highs here, and then again clipping into the next price, which is the 23s. So we see it's already taken a bid, taking the 24 bid, the 25s, the 26s, the 27s. So it's kind of gone back through the range really aggressively. There was no like counter auction back against it, straight to the highs. So if we're thinking about what's going on here, there wasn't really any sellers providing liquidity to there, and obviously people wanting to buy. So now we just want to see some aggression if we want to stay with this for a break. So you can see there was like good size still being clipped, right? Like this market's bidding, but it's still, taking a couple of hundred lots at the highs, right? Then some more aggression highs, like 500 lots there into the 29s. The market's come back down, sort of 500-600 lots into the 28s. Then there we go, bidding again into the highs, nearly 300 lots, and then into the 30s, so that was the high, and then another 100 lot clip. So you can see there's size going through in this market. And then 5 lots paid up, and then it's taken bid. Only got taken bid on 200 lots, which isn't enough. Not enough. But anyway, so then we've got here the 32s, then the 33s. This market was just really bidding, and then just 18 lots into the high. So that was a bit unfortunate for me. I saw it being like so aggressive. I was like, well, okay, it's broken the initial balance high now, so I'll get in. puts just 18 lots into the high, and then it starts pulling back, and it pulls back quite fast. So remembering that we're on 2 times speed. So this market's now pulled back a little bit down to sort of the 28s. And I'm thinking, well, okay, I'm not necessarily like wrong yet. This market may need a bit of space. And so, it's still kind of like holding this region around the high. So as long as it's there, I've got to just give it some space to play out. But now if we look on the 1 minute, it started to form this congestion. So now I'm thinking, okay, I've got this reference point, the 28s, where the market just pulled back to. And it's kind of like the lows of those 3 1 minute candles. And so now we've seen that buying come back. So that's sort of telling me that, okay, this market raced off to the highs, had a little bit of a pullback, I suppose, because everybody's long. And then no one was selling it through the 28s. And then we've seen buyers start to pick this market up again, and it's already back at the highs. And what was 18 lots is now 412. And then the market has accelerated through the highs, leaving this kind of like low volume area. Now, currently 3 lots at the highs. And I'm thinking, okay, this is really aggressive, and I want to get some more on here, because this market could easily just go. So I was thinking, all right, see if it can quickly flick me in this low volume zone and accelerate away. So that was my thinking at the time. However, it doesn't always work out exactly how you want, as was the case here. Not that that's necessarily a bad thing. I made it work anyway, but it just didn't kind of come as I expected. So what you can see here already is that we've got 2 1 minute candles here holding this little wee low volume area. And so, if this was breaking away, you probably really want to see like an extension on that second, 1 minute candle, but that's not what we've got. So I just, sorry, I'm just going to fast forward a little bit here. I have to pause it first. Okay, so you can see now, I've just taken it forward a little bit, and you can see here we've got this congestion zone here again. So it's like held that little wee gap, but it's all kind of within that same like 1 minute volume candle that we just observed. So there's 1, 2, 3, 4, 5 1 minute candles in that really small zone. So this market hasn't like gone and accelerated. It's kind of gone and I held this little LV in here, but like it hasn't really found that drive yet. So now we're just going to watch how that plays out. So at this stage, like maybe this isn't, you're sitting in this trade, or I was sitting in this trade and thinking, I'm really sure it's going to go take those highs, but this isn't really showing me any great aggression. Now, see, there was 34 lots into the highs there. So, okay, again, that's not, size into the highs. And so you can see now the market's starting to come off a little bit. The trade isn't as quick as before. So again, like back into the highs, but like 9 lots, 26 lots. We weren't seeing any like really big numbers coming through. So now the market is sort of starting to offer back. We've just got that 111 down here in that low volume node. And just remembering that 28s was that zone before. So this was kind of that, what I call that control block down here. It always resenders when you don't want it to. And I was thinking, okay, well, as long as that holds, so, it can come back, and that 111 is now 261. And it can actually come right back into this block if it needs to, but as long as it holds the low, then it's fine. I suppose the tricky thing was, I've added up there, so now my price is a bit higher, but I suppose I just had to wear it. I actually put in, this, so I would sell that ad if it came back in, and then potentially buy it again on the break. I just didn't, so at the time, I just wanted to manage my position and not go off too far. So like, I'd still hold a core, as I said, like you just have to wear it back, but then just manage the extra risk that you put on. So you can see the market came back into that zone, just like a tick or two in, put just a little bit of extra volume on that 111 lot there, and then it started to bid away. So that was fine. You just really had to be trusting in your trade here for the fact that it would break out. So now the market's getting a lot more aggressive. You can see it's really clearly bidding through these highs. Like total velocity change, right? So it went from, and we didn't sit there and watch it the whole way through, but stalling for 6 1-minute candles at the start of a breakout to now really accelerating. And yeah, so that was what, so yeah, so it came out of a little bit the size here. I probably should have let it go a little bit longer, but I was really unsure, as I said, how this trade would play out, given that it was all in the context of non-farm payrolls being later. So I didn't want to sit there, holding everything till it came back. And you can see here, like, I'm thinking, oh, this is really breaking away, and it's just going to go and shoot through the rest of that. And that's, you can see where I wanted to get out. But actually, this 30 lot here at 55's created the high, and then the market actually came straight back, right back down into here before coming back out, and then kind of drifting like this into NFP. So I then held the rest of it and then got out here just before NFP as it started to come back. So, you can see that while this looked great, as I said, it's a real let's see if, because we're all the size back down here. And one, great thing about what I did there with taking just a little bit of the size off was that, and if we go back here, so you can see this is where, I entered first, just here at the top of my control block, and then entered, like as we broke out up here. By taking one off here, I almost allowed myself a bit of space because I'd booked a little bit of actual profit at this stage and reduced my open P&L risk. So as the market came back, maybe I was going back to flat for the day, but I don't really I sort of say that also with a warning, because it allowed me to come back flat, it also took away from my profit potential because I got out way too early. The profit potential was potentially going up to here, which was a possibility. I think just NFP made this a little bit harder. But yeah, so key takeaways for this. So just in terms of managing it and, like I said, the mindset. So the key factor to success in this trade was taking the see if attitude, let's see if this can go. And I think what that allows me to do at least is to just sort of not really panic and not think about what's going on in terms of my trade, but just to be an observer of the market without the bias. So, I just said, all right, let's see. And then I was willing to play it out, knew where I was right, knew where I was wrong. And then that was enough. And then the next bit, the key to the decision making the trade was, constantly asking what I need to see, and what invalidates the trade. So I had that control block and I took that first lot off a little bit early. Then it came all the way back down, nearly to my invalidation point. But because I said, well, what do I need to see? Well, I need to see it come back through there and break the buyers if I'm going to get out. And well, it didn't do that. So just constantly asking, well, where am I wrong? Where am I wrong? What do I need to see? Well, it didn't show me anything that invalidated the idea. And so because of that, I stayed in. And so, yeah, so then as long as your trade's not invalidated, so you're not stopped and keep holding. And then the trade management here was the hard part, because then you ended up holding a position to NFP, which I did, and I managed that really poorly. Because once I did that, I really struggled to figure out the context. I thought it could actually come back a long way, because NFP I thought could break my control block, stop, and then I could start, it could turn around and start bidding a bit later. So I thought, that just introduced a lot more complexity to the trade, and I stuffed that part up. But regardless, I still got a bit of profit on this trade. I took off half of the position, and I actually took the last bit off just before NFP, literally one tick off the high at the time. So that was pretty good. I thought, well, it went back to the highs, took the high, was buying tiny clips into the high. I thought, okay, I'll just sell one here. And that was, a brilliant place to take a little bit of risk off, because 5 minutes before NFP, do you really think this market's going to go and do that move that you wanted? The odds are probably not so much. If it does, I'll take profit with the rest of it. If not, I've got, a good chunk of the move, or the potential move already. So booked a little profit there. Anyway, so that is it for today, and I'll be back with another one next week. Have a great week trading, everybody. All right, see you soon.
you.